It's another half hour of markets analysis and insights on business incorporated live from Channels TV Lagos, and here's what's coming up on the program. Kenya signs deal worth $4.48 billion to develop green projects at COP28. And Bitcoin hits 40,000 level for the first time since May 2022. And gold soars past $2,100 to new record, first time ever. Hello and welcome to the program. I'm Will Ebong. Let's kick off with the markets. First up, major equities in Africa. At intraday, major equities were trading positive. At intraday, Nigeria was up. At the time, I took it 0.01%. That's marginal, but 71,424 points. But right now, news coming in says it has hit a new high of 71,500. Great one for the NGX. Now, South Africa was also trading in positive territory, 0.37% up. Let's look at Egypt and see how the EGX 30 performed at intraday. Now, 2.42% up, back to 25,000. Made that flip from the rebound, that loss, reversing the losses we saw last week. And the Nairobi Stock Exchange closed Friday's session in the green. Now we're going to be digging deep into the NGX and seeing what's driving the market, what's driving this high. And Ambrose Omodian, Chief Research Officer, Invest Data Consulting, is joining us this afternoon. Good afternoon, Ambrose. It's good to have you on the show.
Yeah, good afternoon. Thanks for having me.
Ambrose, we've hit a new high, 71,500 at intraday. So what's driving this? What stocks are investors eyeing?
Yeah, for me, it's a good news for Nigerian market that we're making another all-time high. Yes, it's not a far-fetched from what we saw in the month of November. November was a bullish market as our market joined the counterpart across the globe to close positive. The first trading week of December is starting on a strong note. We are seeing that the banking stocks and other blue chip companies are on the top gainer list at this hour. When I'm talking up to like 30 stocks are in green. We are seeing banking stock and others. But my fear is that the fourth trading week is starting on a positive note. But seeing the low cap stock dominating the top gainer, apart from FBN holding that is among them, I'll tell you those stocks. For me, investors have to treat with caution. But for banking stocks, there's a history before now that this sector is the most consistent dividend paying sector, despite the proposed calculation that's coming, either next year from the first quarter. But as you said, that potential in banking stocks is still very, very much high. Knowing that these banks have hit all-time high of about 57 naira. Zenith Bank GTB have gone aside in 2008. But now we are still selling below their all-time high. For me, there's potential for banking sector. And also, after looking at if the capitalization is coming by next year, and also we're trying to see the end of the year, this banking by February next year. It's expected that the banks, no matter how cautious they want to play because of the regulation or because of their proposed capitalization, don't forget that in the history of our market, when you reward investors, they are bound to also follow you to anywhere we are going. If because of capitalization, banks are looking the way of not paying impressive dividend to compensate the price they are selling at this price, it will not be good for the bank. We saw the dividend policy change in the banking sector in the half-year result of these banks that came to the market. For me, it's a good one that will see that change. If that change is sustained at the end of the 2023 financial year result, that will be good for the market, especially as the banks are preparing for capitalization. Because we saw the life of Fidelity Bank that paid 10 kobo the previous year, or the week they are going to announce their private market activities, they announced their dividend from 10 kobo to almost 25 kobo. That gives us a sign that yes, the banks already know that the capitalization is underway. Most of the banks have started their process before the CBN came up with it during the banks activities when the CBN governor was telling us his plan and all those stuff. But I believe that the banks know that the only way to make the investor play more active in their capital raising if they come to the market is by making investors to be happy, especially now that results that banks have done well. Yes, you must say it's because of FS gain. Apart from FS, go and check the results of the banks. Their trading and their interest income have also supported their earnings, which I believe that in that direction, if a good reward is given to investors, that will support the activities of the banking sector. Away from that, let's look at the share index that I just mentioned that hit the all-time high. For me, it's a good one. We are seeing that the market is going that direction. As we speak now, the index is trading around 71,596.33, up by 179.46, which is good, up by 22% in the 0.22% in the green. But I look at the volumes that have supported this breakout, because the strong resistance level before now was 71,566, which was the highest. Today, market look at this level with what a low traded volume, or say with less than an average traded volume for me. And investors are smiling. We need to be very careful at this point, that investors, because markets already on what we call a side trending move for almost 2 months now, starting from late October, the end of November, and we're all crossing to December. If you see market in that kind of side trending move, even that it's making higher high on a little marginal gains, which is good. But don't forget that we're already on the period of seasonality that Santa Claus is on the way, and also end of the year we're addressing. But if this comes and we're not seeing commensurate dividend payout at the end of the year, that correction will come quickly. But if the economy also improves, because already we have seen that the economy and the market is in explanation already as we speak. We are seeing increasing headwinds in the economy. We are seeing mixed data coming from the economy. But the equity market is becoming strong and stronger on a daily basis. Fine, good to know that there's another life of the market. For how long will the market live outside of the economy? It's very, very important. If the government policies were seen, and also the budget plan for 2024, if there's no a clear implementation, and also a clear policy that will kind of complement what we have seen so far in terms of government activities, but perception that put the market to where it is now. If that perception is not sustained going to the future, then there will also kind of also a disconnection from the market.
Okay.
Like I said, so to take advantage of this, I think we're seeing the market now to invest wisely and take advantage of what end of the year that will also come. So far, we're seeing, but the main any season will come in the Q1 2024, which is the peak of any season in Nigeria market. We all know that most companies on the exchange have December as year end. As from first month of 2024, we start seeing unaudited account of these companies, and it will also give investor insight with respect to them. But for those service sector that have supported the GDP, also have seen them also their earnings are positive. Investors will be looking that way what to position. But as a positioning, have your plan, know your buying range, and also know your stop loss. That at the end of the day, you will stay out of the market, because any up market is an opportunity for you to sell, and when market pullbacks, opportunity also to buy into value.
Okay, Ambrose. So, what reliable support and resistance levels are you seeing for the all share index?
Yeah, for the all share index, we're seeing that for me the safe support resistance level is what we can't give now, because market is making new all-time high. That means market is climbing up. Where investors look at where is the next support level that will be safe for us in the market, because the market is making a new all-time high. We can't say this is the resistance because the market have not come to this level before now. But we can be looking at what is the other indicators saying. Well, when we look at what we call RSI, which is a relative trend index, you see that the market is already at overbought region. And when market is at overbought region, it tells you that market is about to correct. But a safe support level that we're seeing in invest data like that, market will first of all touch the same level of 69,000 mark. That's the safe level that market will touch. But if you touch there and gather more strength, market will surpass the peak of what we're seeing now, 71,596. Because when market pulls down, it gather more strength to go up, and that strength will tell market to do. But that strength will come from the perception of the end that will come in first month of the 2024, which is in January and February, where we're seeing few banks that are going to the early filers bring the result in February. This will change the trend, but market need to correct to gather more strength to break out what we are seeing today at the all-time high of 71,596.133.
So what are you seeing in your charts? An analyst I spoke to on Saturday said we may not have a Santa rally. Do you agree with this, Ambrose?
Yes, I've said it part of that what we might see Santa rally, but we might not see what we call end of the year window dressing. Why is that? Most of the stocks in the market have beat their prices are selling ahead or above what they opened the year. Most times when you see end of the year redressing, it's a situation when companies are selling below what they opened the year. Towards the end of the financial year, they want to close higher. In that regard, they will come with dressing. But at this point that most of stocks are selling at a new high. This is high for me. I don't see no dressing coming, but for Santa rally, it's a nature of the market, because that's the period. Call it those market players want to celebrate Christmas. They want to push price up to sell high, and then also at that particular time, my see Santa rally. But what I mean that for so my see Santa rally, but not end of the year because most of stocks are selling already at their peak, high. For me, there is no more. But let's expect that since he said so, like we just said, I'm not in dispute with that, but I believe that we might not see end of the year redressing because of that. But technically, it might come because that's the nature of market traders anywhere in the world, not only in Nigeria.
Thank you so much, Ambrose Omodian's Chief Research Officer, Invest Data Consulting, for sharing your insights this afternoon.
Thanks for having me.
Now let's go over to the Middle East, where it's mostly red at intraday. Let's see Abu Dhabi and Dubai, how they performed. Down 0.21 and 0.12% each. Elsewhere, let's see how Saudi and the Qatari indexes performed. Saudi Arabia up 0.05%. The only gainer in that region, Qatar, was down almost 1%, 0.85 to be precise. Now, Ukraine risks of being left empty-handed in its war against Russia by the European Union, and that's because EU leaders are divided over a 50 billion euro lifeline the union had pledged Ukraine. Now, for more on this, we're joined by Deutsche Welle's correspondent Marie Sina in Berlin. Marie, the EU had pledged Ukraine 50 billion euros. Now, that's unsure. Tell us more.
Right. So back in June, European Commission President Ursula von der Leyen announced that the EU will provide Ukraine with this large chunk of additional aid. And that money was meant to go towards rebuilding the nation in the years to come. But now that looks unsure because some EU member states are not on board. And ultimately, member countries have to sign off on the 50 billion euro lifeline because they are the ones who will have to pay for the majority of it. And there are two factors threatening extra aid for Ukraine in particular. The first one is the recent victory of a far-right party in last month's election in the Netherlands. The Freedom Party under Geert Wilders won the majority of seats in the Dutch parliament. And that party in the past has said it wants to halt Dutch financial support for Ukraine. Geert Wilders has also repeatedly said he wants the Netherlands to leave the European Union altogether. So it's not looking like the Netherlands will be very cooperative in this gridlock. And the second factor is the giant hole in the German budget at the moment. A constitutional court in Germany recently ruled that a 60 billion euro fund that the government had planned to spend on clean energy and industrial projects will be cancelled. And this 60 billion euro hole in the German budget means the EU will be strapped for cash as well. That's because Germany is the biggest contributor to EU funds, and Berlin has already said it rejects any extra spending for the EU's wallet simply because it needs to save money for its own budget right now. So the Netherlands and Germany are the ones driving doubts of any extra funds going to Ukraine.
So what are the implications for Ukraine if extra EU funding is not approved?
That would be a hammer blow to Ukraine. It's already facing a bleak winter. Its counteroffensive against Russia this summer was not successful. All the while, Russia is increasing its arms production. Plus, there already is growing concern that Western support for Ukraine is waning. And in addition to that, U.S. funding for Ukraine is stalled right now as well because Congress is politically divided on the topic. So the European hesitation comes at a very bad time. Ukraine has warned that uncertainty over the US and European support packages is putting the country's financial stability at risk. So Ukraine will be very closely watching these developments, and ultimately it will be decided on December 14th and 15th during an important summit in Brussels whether this extra aid from the EU to Ukraine will go through or not.
Okay, now let's turn to the markets, shall we, Marie? What are investors looking at today?
Investors in Europe will have their sights set on gold. It surged this morning, reaching a new record high, touching $2,100. The gold price has actually been rising for 2 consecutive months now. One big reason is the Israel-Hamas war, because gold is seen as a reliable store of value during times of geopolitical uncertainty. And in addition, lowering inflation data means expectations are rising for the European Central Bank, the ECB, to ease interest rates in March, and investors will have their sights set on a speech and Q&A by ECB President Christine Lagarde later today for any indications. And also, fresh data out of Germany says that German exports fell in October, edging down 0.2% compared to the previous month, and that's amid a slump in demand within the European Union, which is one of the most important export markets for Germany.
Thank you so much, Marie Sino, Deutsche Welle's correspondent there in Berlin, for bringing us those updates. Now, just bouncing off what Marie said, gold prices notched a new record on Monday for a second day in a row, with spot prices touching $2,100, first time ever, as the global rush for bullion appears set to continue. Now, prices of the yellow metal have risen for 2 consecutive months, with the Israel-Palestinian conflict boosting demand for the safe haven asset, while expectations of interest rate cuts have provided further support. Now, gold tends to perform well during periods of economic and geopolitical uncertainty, as Marie said earlier, due to its status as a reliable store of value. Now, analysts believe the anticipated retreat in both the USD and the interest rates across 2024 are key positive drivers for gold. Now, gold prices are on course to hit fresh highs next year and could remain above $2,000 levels, analysts said, citing geopolitical uncertainty and a likely weaker US dollar and possible interest rate cuts. Thanks for staying with us. Now, it's a day of new highs. Bitcoin also has topped $41,000 as the largest digital asset extended a 2023 rebound on expectations of interest rate cuts and the prospect of greater demand from the exchange-traded funds sector. Now, the token rose as much as 5.1% to reach $41,746, and that was just shy of that mark early on Monday in London, taking its 2023 jump to 152%. Now, Bitcoin was last at such levels in April 2022 before the Terra surge stablecoin collapse that contributed to a $2 trillion rout in digital assets. Now, smaller tokens such as Ether and meme crowd favorite Dogecoin also pushed higher. Now, a gauge of the largest 100 crypto coins added more than 4%. Now, a lot has been coming out of COP28, which is ongoing in Dubai and attended by about 170 countries. According to Nigeria's finance minister, Mr. Wale Edun, the conference is the best place to attract investments to grow Nigeria's economy. Let's take a listen.
I think just as important as the dialogue on climate change is the transactions, the deals, the agreements, the understandings that are being signed off. And I think in the case of Nigeria, it is attractive as a large market, not just for production domestically in Nigeria, but also many people see it as a place from which to serve the rest of the subcontinent, that's West Africa, and even the continent as a whole. So this is a place where you have, for COP28, about 170 countries, about 70,000 politicians, investment bankers, activists, investors who have funds to contribute to help with the climate adaptation. And so it's an important place to be to get the money that we need to invest in the Nigerian economy. Thank you.
And some countries are having it good already. Kenya signed deals for 7 green projects on the sidelines of the COP28 summit, which include geothermal generation plants, fertilizer production, and a data center powered by renewable energy. The Kenyan President William Ruto says this is a push for Africa to become a green powerhouse. Kenya generates 92% of its electricity from renewables, including geothermal, hydro, and wind. The nation also has a target to grow 15 billion trees and rehabilitate 10,000 wetlands with an eye on nature swaps. Now, more pledges coming in from COP28. African and global institutions, together with governments of Germany, France, and Japan, and philanthropists, have pledged over $175 million to the Alliance for Green Infrastructure in Africa, AGIR. The landmark initial pledge will help to rapidly scale up financing for transformative climate-aligned infrastructure projects across the continent. Now, the new pledges will also advance AGIR's towards its first close of $500 million of early-stage project preparation and Development Blended Capital. The alliance is a partnership of the African Union Commission, the African Development Bank, Africa 50, and other partners. It works to unlock up to $10 billion private capital for green infrastructure projects and to galvanize global action to accelerate Africa's just and equitable transition to net zero. Now, South Africa's Home Affairs Minister Aaron Motsoaledi has extended the validity of the Zimbabwean exemption permit and the Lesotho exemption permits for 2 years. The exemption issued to the Lesotho nationals was set to expire on the 31st of December 2023, and the validity of the exemption permits issued to the Zimbabwean nationals was initially extended by the court earlier this year. The Zimbabwe exemption permit has been a vital mechanism allowing Zimbabwe nationals to legally stay and work in South Africa. Now, South Africa correspondent Innocent with the details.
Home Affairs Minister Aaron Motsoaledi briefed members of the media on granting exemptions for Lesotho and Zimbabwean nationals. Meanwhile, there's been an outcry from business community about business permits for those who want to set up businesses in South Africa.
We don't have any backlog on business visas. We have got backlog on dependency visas. And time and again we are told this, that we have got the backlog on business visas, etc. We issue them as quick as we can because we want the economy to grow. The backlog we are having and we are looking for solutions is dependency. That means any business person who comes here, they would like to come with their spouse and the family. That's why we are having it tough, because we have taken all our resources to deal with the business person themselves, a CEO of a company, a person who is going to establish a business. But we keep on hearing this backlog on business. For instance, last year, the president had an investment summit. I think it was in May or June last year. There were about 20 companies which pledged that they will. MTN, Mercedes, German Development Agency and all that. They pledged that they want to invest in South Africa. And after the investment summit, between themselves, they provided us with 3,090 individuals who they said must come from other countries to come and implement that investment. 3,090. By October, that's last year, we've already issued them. But in January, we had an outcry that we are collapsing business, we're doing nothing, and all that. I am not sure why people do this to us.
Is South Africa likely to follow Rwanda in free visa for visitors?
It's not only Rwanda that is giving visa free. We also do that, but you don't do it to all countries. Because when you issue a visa, free status, you look at three things. And that every country in the world is doing that. One, if you issue this visa, can you guarantee the safety and security of people in your own country? Can you? Number two, can you guarantee the sovereignty of your country? And number three, what are the developmental needs of your country as opposed to the other country that you are giving this visa?
Addressing this challenge requires a comprehensive approach and including a transparent immigration policies. Well, the minister concedes that there has been challenges, or there are challenges in his department, but he says that they are working around the clock to correct some of these challenges and the backlog that comes with it. From Pretoria, South Africa, Innocent Samosa, Channels Television News.
I believe safety and security is what our leaders, African leaders, will be looking at to ensure that we do have this free movement of persons and goods across the continent. And that's a wrap on Business Incorporated. I am Will Ibong. Thanks for watching, and I'll see you tomorrow.